Hello, everybody. Good morning, good afternoon, good evening, wherever you are around the world. My name is Rose Joshua. Welcome to Family and Finance. So today we have repeat guests by very popular demand. In the mortgage industry, our veteran mortgage broker Collin Bruce is back to talk to us some more about stuff around mortgages. And we have his associate, Mr. Olusayo Adekunle, also with us here. So I'm going to share quickly the contact information, and then we can just start. So your contact person is Olusayo. He's going to connect you with Collin for all your mortgage needs. So today is a very interesting topic that's very dear to my heart, and I'm not going to talk too much. I'm going to have Collin jump into it. And so, Collin, it's very exciting. What exciting topic do you have for us today?
Well, I believe you want to talk about the borrowed down payment mortgage, which is very popular, we're finding.
So you're calling it borrowed down payment, and I'm permitted to call it zero down payment.
That's
So legally it is called borrowed down payment, but in the streets it is called zero down payment, and it's very very exciting. So zero down payment, aka borrowed down payment. Awesome. So that's in order to buy a property. So please tell us, how does this work?
Absolutely. Well, and just even to your first point, years ago, before they made some of the recent mortgage rule changes, we did have 100% financing available. So you could either do that with a cashback mortgage for a down payment, or you could get a mortgage up to 100% of the value of the home. So that's where the zero down came from. A couple of years ago, they pulled that program, and now it's the borrowed down payment mortgage. So how it works is all mortgages, you do need to have 5% down from somewhere. And we have lenders that allow the 5% down to be borrowed from a line of credit or loan. We can get your clients the line of credit that they can use for the down payment. And it's a great product. This is the only mortgage available in Canada that the CMHC insured, government insured, that you can get approved without having the 5% down payment saved up.
Okay, that sounds exciting. So somebody wants to buy a home, they don't have the down payment saved up. You are able to get them the down payment via line of credit or a loan.
Correct.
And then they get the remaining, so let's say it's 5%, they get the remaining 95% via the regular mainstream mortgage. Okay. Who qualifies for that? Like, what are the conditions to get that too?
They do want cleaner credit on this mortgage. So the minimum credit score required is 650, where if you had, say, 5% down from savings or RSPs or gift, you could get approved with a 620 credit score. So it's a 650 credit score. When we submit the mortgage in for an approval, we say, hey, this down payment is coming from this line of credit, and we have to include that payment into the debt ratio. So the lines of credit that we've been getting approved are at ATB. The clients can go anywhere for the lines of credit. It doesn't matter where it comes from, but we just find that since the big five banks don't offer the borrowed down payment program, that they sometimes won't approve the lines of credit for us, where the ATB is perfectly happy doing that. So ATB's lines of credit are interest only payments. So if you did borrow, say, $15,000 for the down payment, you're probably making a payment of $100 or $120 a month. You want to try and pay more than that, or else you're just paying interest on that line of credit. And it does reduce how much you qualify for a little bit. You do need to be a permanent resident to use this program. We do have the new to Canada programs, but you do need to have 5% down with that. But yeah, so as long as you're a PR, good credit, yeah, it's a great program.
Okay, so permanent resident or citizen, credit score 620 if it's a loan,
650,
650 if it's a loan, and then 620 if it's an RRSP.
RSP or savings or gift. And I know, I mean, that's another opportunity for clients that don't maybe qualify for the borrow down. They can approach you guys and look at even getting, I don't like RSPs through you or RSP loans and use that. And it just has to sit for the 90 days. But yeah, that's another option.
Okay, that's very exciting because there's a lot of information here. My head is
exploding. I know we're throwing it all.
It's really cool. I like it. So Olusayo, so what we're hearing is so let's say somebody wants to buy a home in the next 3 months, 4 months. They don't have the money. They have the credit 650. They have, we haven't talked about the TDSR and GDSR. We're going to come to that. But let's say everything lines up. So Olusayo, you can get them an RRSP loan today. Let it sit in the system for 90 days. And then Collin, you can use that to get them a mortgage.
Correct. Yep.
That sounds exciting.
Yeah, I know. Awesome. And that's another, and then they get the tax benefits, right? They
get the tax benefit.
The borrow down's a good program too, in that, when we're talking to people about this, because it's usually first-time home buyers that are looking at this program. And with the cost of rent, like I just ran the numbers for somebody. So a $300,000 purchase price, assuming $250 a month for property taxes and borrowing the down payment, you're looking around a $2,000 a month total payment for mortgage, taxes, and the line of credit for the down payment, which is probably pretty close to rent, right? At least you're building equity in a home that you own, right? So, and that applies to the same with the RSP loan, because you'll have the RSP loan payment, but then you also have the tax benefits. So, yeah.
Okay. But then to everything, there's a good side and not so good side, right? So the downside is, okay, so here's two scenarios. Somebody doesn't have the money, they can get it as a gift from a family member. Mm-hmm. So there's no interest there. But if they don't have a family member that can lend them the loan, gift them the money, then it has to be, then they can do the borrowed down, zero down, borrowed down concept. Okay. Olusayo, what are your ideas? That, I know that this is very exciting. Tell me what you got.
This is really awesome. It's for me, it's again another area which is eye-opening, because I really don't think there are very many people out there who have this kind of information. And I know there are many people who would like to leverage this information so as, they can have their own first home, right? And we have great partners who we partner with for those who want to, have borrow for RRSP or for whatever kind of investment. So it's quite doable. It's really doable. Yeah, awesome.
Yeah. So I said, Olusayo, you have your work cut out for you, because this is like a big deal. So all of a sudden, people are gonna please, my listeners, connect with Olusayo, have him, whatever it is you need, have him set up an RRSP loan. RRSP loan, you gotta remember, is not just in February. Some people think it's only January to March. No, you can get an RRSP loan right now. Okay, so you can do that. So Olusayo can help you. And so, Collin, how about how do you factor in the TDSR, GDSR? Tell us about that.
Well, you're right. So every $10,000 that you use, like that you borrow on a line of credit, we have to use a $300 payment against the client. So it's 3% of the balance. And every $300 payment equates to $40,000 to $50,000 worth of mortgage that they don't qualify for. The same calculation would happen with the RRSP loan as well, depending what the monthly payment. And that could be something to look at too. Like, I would love to learn more about that end from you guys, like just payments and how that works. But yeah, it does reduce what they qualify for. So, and a lot of times clients, maybe they have half the down payment saved up, right? So they don't need to borrow the full 5% down. So if they have half of it saved up, they can borrow the other half too. So maybe it doesn't affect it as much, the TDSR as much.
Okay. So here's another scenario. So you mentioned ATB, and God bless ATB. Looks like they're doing a good job. Good job, ATB. I do bank with ATB, so that's actually good. So let's say, what if somebody already has a line of credit with ATB? You can use it. Should they go to ATB directly for that, or should they come to you? Which way is better for you, for your function?
They should come through us, because then we have our contacts and we can get that set up very quick. It's all they don't even have to go into a branch. It can all be done through electronic signing, and we can send info that we have. But your first question, they don't necessarily need an ATB line of credit. They can use a Scotiabank line of credit or an RBC. It doesn't matter where the 5% comes from.
Okay.
I just find that the banks, because they don't offer this mortgage, they may not approve the line of credit for it. But if the clients have it already,
ATB.
Yeah, if they have it already in place, please use it. Absolutely.
Okay, so if they have already a line of credit in place, you can go through ATB to get the mortgage, because ATB would approve a line of credit through everybody.
Yeah,
but then it's best if they come through you, because you have a special team that you're working with. So if they went to ATB directly, they may not get the benefit that you're talking about.
Correct. Well, and it's not just ATB that offers the mortgage. So I guess there's two parts of it. There's the line of credit part, and then there's the mortgage part. So the line of credit can really come from anywhere. The mortgage, there's 5 or 6 lenders that allow it. So ATB, First National, Merrick's, like a lot of monoline lenders allow it. But yeah, like right now ATB is low rate too, so that's where we put clients for the mortgage too. But yeah, 2 parts: line of credit portion, mortgage portion.
Okay, so not the big banks, not RBC, TD, and okay. So yeah, the big banks, they're full.
They're full.
they have too many customers. Okay, so now let's go with ATB. You said First National, quite a few. Okay, that's good. Thank you so very much. I'm really excited to share this with my listeners, because that down payment is a big deal. Mm-hmm. The down payment is the reason where many people are unable to get a home. But if they have clean credit, good debt ratio, then they can come to you, Collin and Olusayo, and get themselves a home as early as tomorrow.
Yeah. Well, and if they start with Olusayo and figure out, hey, does an RSP loan, and go that way, and then we can, that's the way to go. But if it doesn't work out, then we can go on the borrow down as well. So absolutely.
Okay. And so let the flood begin. So Olusayo, keep your phones open, keep your phone charged, and take care of the people across Canada as they come to you for that. Okay.
Well, we're concerned because Alberta is expected with there's 1.5 million new immigrants coming into Canada, and they're saying 300,000 are expected to land in Alberta in the next couple of years, which is going to drive up rents, which is going to, so if there's people renting, this is where buying like this, at least you're building equity in your own home,
Mm-hmm. Mm-hmm. That's good. Okay. Yeah. So RSP loans, 0 down payment, AKA borrow down. So Mr. Bruce, what else do you have for us today?
Well, I mean, tomorrow's an exciting day. I know not about the borrow down, but interest rates, the prime rate may go up a 1/4 point. I hope not, but we're nervously anticipating a prime rate increase tomorrow. So we'll see. I'll send out info.
Sounds painful.
Yeah, hopefully.
That sounds painful. My mortgage is variable. So yeah, I'm scared.
Yeah, hopefully not. But yeah, there's talk. So we'll see.
Okay, sounds good. So I know that we had a quick chat about the reverse mortgage. Do you want to talk about that today, or do you want us to schedule another time for that?
Oh, sure. We can, like the CHIP reverse mortgage. So yeah.
Yes. Okay. So CHIP reverse. Okay. Reverse mortgage. Tell me how it works. It looks like it's for people who already have a home.
Correct. So you have to be over 55, and the loan to value, so the amount of mortgage percentage-wise versus your house value, it increases the older you get. So somebody at age 55 is going to get a smaller mortgage than somebody at age 80. It's at a higher interest rate than a traditional mortgage, but the clients, it doesn't matter about their credit, it doesn't matter about their income, and then the clients have no payments, right? Because the mortgage interest accrues on the mortgage. So to really simplify it, if their thoughts are, if the house is worth 400,000 and the clients have a $200,000 mortgage on it and the interest rate is 6%, what they're hoping is the interest rate like 6% adds on every year, but then the house increases by 3% every year. So they always maintain that 200,000 equity in the home. And whenever the clients sell the place, the equity goes to them or to their family. So it's not like we hear a lot of people thinking that they give up ownership to their home. No, it's a regular mortgage. It's just they don't make any mortgage payments and there's no qualifying.
They don't. So somebody help me get this correctly. So somebody has a 400K mortgage. They're 55 plus. They've paid it down to 200K. So there's an equity of the 200,000. They come to you and they talk about reverse mortgage. So then what happens is you help them to stop making payments on the mortgage. Do they get money coming in?
You can. So depending on the loan to value, like there's some people, like let's say somebody has a free and clear house.
Okay.
We'll have people that'll say, you know what, can you put a $200,000 mortgage on my house and then just pay me $1,000 a month to supplement their income?
That was my understanding. Okay.
Mm-hmm.
So now then the bank pays them from their equity.
From their equity.
So is it like a home equity line of credit?
It's a mortgage, but it's somewhat, yeah. You know, I had somebody ask me this. So the interest rate on the chip mortgage, on the reverse mortgages, are higher than regular mortgages, right?
Higher.
Higher. But so I said to somebody, if it's my parents, let's say my parents are just getting by and they have CPP and OAS and that's it, but they have a free and clear home. So now they're, especially with all the expenses, I would much rather them pull out the equity to their home and enjoy life, give it, you know, and then use that to enjoy their life and then pay it off when they sell the home, right? Like, so financially a mortgage is probably better because the interest rate is lower, but then you've got payments, you've got qualifying, right? Where this is it's a good product for certain people, for sure.
Yeah. So if they pull out the equity in the home, isn't that a home equity line of credit?
Well, home equity line of credit is where you'll get a loan for 200 and they can pull out as much as they want and then put money back in, whatever they want. A mortgage is more, it's like it's a $200,000 loan that they set up and then they'll set up installments, or they'll just give you the 200,000 that they can use for investments or whatnot. So okay,
sounds good. So in that case, Olusayo, I'm going to ask. I have a friend who was asking about the reverse mortgage. Olusayo, I'm going to send him to you. Please take care of him and connect him with Collin. So you guys can give him a hand. Olusayo, you were asking a question. What is the impact of zero down payment on mortgage interest rate?
Interest rates stay the same. So the only difference is the CMHC premiums is a little bit higher. So when you buy a home with less than 20% down, the mortgage has to be insured by CMHC, Sagen, or CG. At 5% down savings, the premium is 4%. And that would be the same thing with an RRSP loan, 5% down, 4%. Borrowed down is 4.5%. So it's a little bit higher CMHC premium that's added to the mortgage, but rates are the same.
Okay, it's not significantly higher, 0.5%. It's actually good. Like if I was in a position where I don't own a home, I have clear credit, I would actually do the zero down.
Well, like if you were buying a $300,000, I'm pulling up my calculator. So a $285,000 mortgage times 4.5% is 12,825, and 12,825. 11, sorry, as I do the 12,825. So it would cost you an extra $1,400 in CMHC insurance that is added to the mortgage, not out of pocket, but added to the mortgage to borrow the down payment. And the rates are still, they're 4.49 today for a 5-year fixed rate, whether you borrow the down payment or whether you have it from your own resources.
That's so cool. Okay, one last question and then we can wrap up. when do they have to finish paying the borrowed down payment? I know you said ATB is interest only, but at what point do they have to pay it? But is it mandatory or?
Never
What?
really. They should, but it's a regular line of credit that they can pay down and then they can use to build a fence or buy whatever. So it's just a regular line of credit that they can take their time to pay.
Okay, sounds good. Okay, so listeners, Mr. Olusayo, do you have one last thing to say before I wrap up?
I just want to thank you and also to thank Colin for this enlightenment. One of the things that we do, educate families, on finances, educate them on the opportunities that are out there for them to leverage on. So thank you so much for bringing this program on board. It's so eye-opening. Thank you.
Colin, thank you so much. This has been so enlightening. Do you have one last thing to say to my?
I was going to say, I want to thank both of you guys. I think you guys are amazing at what you do, and I really appreciate the opportunity to talk to your clients and the partnership here. So yeah, it's fantastic. I'm very humbled and lucky to be part of this.
Awesome. Thank you so much. So my listeners, connect with Olusayo, have him sit with you, determine what needs to happen, and let's get you out from renting into owning your own home like ASAP. Okay. Thank you all so very much. Zero down payment, aka borrow down. For leaks, just so we don't get into legal trouble. Thank you so much, Colin. Thanks again, Olusayo. Have an amazing day. Thanks.
You too. Thanks for having us.